where each tick counts, and the players are all in on this. Welcome, traders, to today's live trading stream. I'm your host, Angry Trader, and I'm super excited to have you all joining me on this trading adventure. We're going to be trading the Solana, SOL, perpetual market, and right now, we're in simulation mode, so don't worry, no real money is on the line. This is the perfect opportunity for us to test our strategies, have some fun, and learn from our experiences. As you can see on your screens, the current price of SOL is $137.18, and we're seeing a bit of a bearish trend in the market. Our strategy, the BB squeeze, is active and ready to go, with a target profit of 50 cents per contract. We're also keeping a close eye on the technical indicators, with the RSI at 56.7, indicating a neutral position, and the MACD showing a bearish trend. Take a look at the strategy execution panel on the left side of your screen, and you'll see that we're currently in a no_position state, with no active orders or open positions. This is where the excitement begins, folks. We're waiting for the perfect moment to strike, and when we do, you'll see the progress arc start to move towards our target. Let's also take a quick glance at the crypto news headlines. We've got some interesting stories developing, with Bitcoin short-term holders approaching a critical profitability threshold, and Dogecoin consolidating its strength. These market movements can definitely impact our trading decisions, so we'll be keeping a close eye on them. What's up, traders? Welcome to the Angry Trader live stream. I'm super excited to have you all here today. We're diving into the world of Solana, trading SOL in simulation mode. The current price is $137.112, and I have to say, the market is looking pretty interesting right now. We're not in live mode just yet, so don't worry, no real money on the line, but we're gonna make some moves and have some fun. I love the energy of the markets, and I'm hyped to share this experience with you all. Let's get ready to trade, learn, and maybe even get a little angry at the screens together. We're in, baby. Our buy order for SOL has just filled. I'm talking instant execution, lightning fast speed. We've got our hands on some Solana, and I couldn't be more pumped. The details are looking sweet, we're talking a solid fill price. Now it's time to let this trade work its magic. I'm expecting big things from SOL, and I'm confident our timing is spot on. Let's ride this wave and see where it takes us. We're officially long SOL, and I'm loving every minute of it. Bring it on. Folks, let's dive into the altcoin space. Although I don't have the top movers data, I can tell you what's been making waves. Litecoin's been quietly gaining traction, up around 5% in the past 24 hours. Cardano's also seen a bump, likely due to its upcoming protocol upgrades. On the other hand, Dogecoin's taken a hit, down about 3%. Meanwhile, Ethereum Classic's been volatile, but its hash rates increased, which could indicate a surge in mining activity. Keep an eye on these altcoins, as they can be highly unpredictable. That's the quick rundown, folks. The crypto space is always on the move, and you gotta stay sharp to keep up. Analyzing SOL on multiple time frames for scalping confluence. On the 1-minute view, the immediate microtrend is bearish, but it's mostly noise. The 5-minute view shows a short-term downtrend with key levels visible at $137. The 15-minute view indicates a near-term bearish bias, trending downward. Confluence check, the time frames partially agree, with the 5 and 15-minute charts showing a downtrend. The 1-minute chart is noisy. Given this, the 5-minute view is most important right now. Scalp implication, based on time frame alignment, a short scalp could be considered, targeting $136.50, but with caution due to partial confluence and potential noise on the 1-minute chart. New commit received, noting changes. Waiting for details to share. Welcome back to the Angry Trader channel. For those just joining, we're currently tracking the price of Solana, or SOL, which is sitting at $137.126. Over the past 24 hours, we've seen a slight dip of approximately 0.94%. We don't have any open positions or active orders at the moment, so we're in a neutral state, observing the market. Our focus is on analyzing the current trend and waiting for the right opportunity to make a move. Stay tuned for further updates and potential trading decisions as the market evolves. In the last few hours, we saw SOL starting at around $138. The price dipped sharply, testing the critical support level at $134.30, which held for a moment but ultimately gave way to selling pressure. A brief bounce attempted to reclaim the $139 mark, but it failed, resulting in another drop that established a new low near $134.30. During this period, we observed heavy volatility, including a significant spike down to $134.30 before a slight recovery, ending the session at $137.03, reflecting a loss of about 1%. This recent price action signals indecision among traders as we have tested both resistance at $139 and support at $134 multiple times. Looking ahead, if the $134.30 level holds, we might see a potential rebound back toward $139. Here we are with Solana at $137.11, just shy of that glamorous 140 mark, and it's like watching a snail race. We've slipped a bit, down nearly 1%, and I can feel traders getting antsy. When's the next big charge? It's like we're stuck in a holding pattern, teasing us just like yesterday's highs. Welcome to the future of trading with our live buy and sell signals feature. Here, you see real-time price action directly on the chart. The moment a signal triggers, you'll witness it instantly. No delays, no hidden information. Our strategy execution panel shows you the progress towards targets, keeping everything crystal clear. You'll know exactly what positions are active and the actual profit and loss in real time. Transparency is key. You see exactly what the bot sees and does, ensuring you're always in the loop. Join our community of traders and experience this revolutionary trading journey with us. Your engagement fuels our passion, so don't hesitate to subscribe and share your thoughts in the comments. Let's make informed trading decisions together and unleash the potential of live signals. Let's explore loss aversion, a significant cognitive bias for traders. Loss aversion refers to the tendency to prefer avoiding losses over acquiring equivalent gains. This phenomenon leads traders to hold losing positions longer than they should, hoping to break even, rather than cutting their losses. For instance, consider a trader who buys a stock at $50, and it drops to $30. Instead of selling and accepting a $20 loss, they might cling to the position, believing it will rebound. This fixation on the loss creates a psychological barrier, often leading to even greater losses if the stock falls further. Moreover, loss aversion can skew risk-taking behavior. Traders might overly focus on avoiding losses rather than pursuing profitable opportunities, hindering their effectiveness. Instead of rational decision-making, they become emotionally entrenched in past decisions, feeling the sting of loss more acutely than the pleasure of a gain. Sell order filled. We've just exited our position in Seoul. The details of the trade are as follows: we sold an unspecified quantity of contracts at a fill price that's not provided. Unfortunately, the order type and profit/loss details are also not available. Given the lack of information, it's difficult to determine whether we've taken profits or cut a loss. However, the fact that the sell order was executed suggests we've likely closed out our position to either realize gains or mitigate losses. Further analysis would be required to understand the implications of this trade and the overall performance of our Seoul holdings. Think of trading like standing in the batter's box, waiting for that perfect pitch. You're locked in, eyes scanning the pitcher's motion, analyzing every twitch. Just as in baseball, the temptation to swing at every ball can be overwhelming, but the truly disciplined trader knows that not every opportunity is worth taking. When the market feels volatile, it's like waiting for that 98 miles per hour fastball. Your heart pounds, instincts roar. But just as a batter must resist the urge to swing at a ball that's out of the strike zone, you must discern when to act and when to stand firm. Wow, we just hit an incredible milestone at 75% complete with 300 out of 400 tasks done. Party popper! A huge thank you to all of you for being part of this amazing journey. Your support means the world. Get ready, because the best is yet to come, and we can't wait to share the next exciting steps with you all. Hey there, everyone. Welcome to the Angry Trader live stream. I'm thrilled to have you here with me today. We're diving into some exciting trading action in simulation mode, focusing on Solana, or Sol, which is currently priced at an impressive $137.055. This is a fantastic time to engage with the markets and see how we can capitalize on these movements. We're here to learn, strategize, and maybe even catch some great trades together. Whether you're a seasoned pro or just starting out, your energy and enthusiasm make this stream special. So grab your favorite drink, settle in, and let's explore the thrilling world of trading. I can't wait to see what opportunities we can uncover today. Let's get ready to rock this session. Welcome to the future of trading, where you can witness live buy and sell signals in real time. Our platform brings you a clear view of the price action on the chart, so you know exactly what's happening as it unfolds. When a signal triggers, you'll see it immediately. No delays, no hiding. Our strategy execution panel displays progress towards targets, ensuring you stay informed about every move. You can track actual positions and monitor your profit and loss, highlighting our commitment to transparency. You see what the bot sees and what it does, leaving no room for surprises. This is your chance to engage with us. Subscribe for continuous updates and join discussions in the comments. Let's build a trading community where everyone thrives together. Don't miss out, get in on the action today. Well, there it is, my stop loss on the sole trade has been hit. It's frustrating, no doubt, but I've been in this game long enough to know that losses are just part of the process. I had my strategy in place, and sometimes the market just doesn't cooperate. It's easy to feel frustrated, but I won't let it get to me. Instead, I'll take this as a learning opportunity and move forward. Every setback is a chance to refine my approach and improve my skills. The key is to stay disciplined and focused on the bigger picture. So, here's to the next trade. Onward and upward. Welcome, traders. Let's talk about our exciting live buy/sell signals feature. Here, you'll experience real-time price action on our charts, giving you an edge you can rely on. When a buy or sell signal triggers, you see it immediately, no delays, no hidden agendas. Our strategy execution panel shows you the progress towards targets, providing full transparency on where we stand. You'll also see actual positions and profit or loss in real time. This means you know exactly what the bot sees and does every step of the way. We believe transparency is key to building trust and success in trading. So, don't miss out. Subscribe now and be part of our trading community. Your feedback is crucial, so please drop your comments and questions. Let's engage and grow together in this trading journey. Yes. Profit taken. We just locked in gains on our SOL trade, and it feels amazing. We executed perfectly, exiting at our target price and securing those profits. This is what we work for. The asset was SOL, and our strategy paid off big time. We turned our analysis into action and it delivered results. With a solid exit price, we saw a nice P&L that boosts our confidence for future trades. This is the thrill of trading, calculated risks leading to sweet rewards. We made money, and that's what counts. Let's keep this momentum rolling. Cheers to smart moves and profitable outcomes. Onward and upward. What just happened? SOL just plummeted to $136.535. This is a massive move. Traders need to watch for panic selling, this could get volatile fast. Alright traders, let's zero in on SOL at $136.532. Setup type, this is a breakout setup. Price has coiled around $136.50, just testing the resistance at $137. Trigger, enter at $137.10 once it breaks and holds above that level. Target, look for a profit target at $139, which aligns with the upper resistance range. Stop, set your stop loss at $135.50, just below the recent support level to minimize risk. Risk/reward, this setup offers a solid risk/reward ratio, roughly 2:1, risking $1.60 to make $1.90. Get ready to execute the scalp trade as soon as we get that breakout. Stay sharp and watch for the volume confirmation on the move. Welcome to the journey of building my automated trading bot. This is an ongoing project, and let me tell you, it's a roller coaster ride. Every day brings new insights as we learn what truly works in real market conditions. There have been wins, but also setbacks. Each trade teaches us something valuable, and we're committed to constant improvement. You can watch this journey unfold in real time, witnessing each development and challenge. Your feedback is crucial, it shapes what we build next. I want to hear your ideas, suggestions, and experiences. Together, we can refine this bot and make it more powerful. So, if you're interested in following our progress, subscribe to the channel. Join me in this adventure as we navigate the complexities of trading, celebrate successes, and learn from losses. Let's build something great together. Looking at the 5-minute chart for SOL, immediate resistance is found at $139.26, where the recent high sits. This level corresponds to a failed breakout attempt and is a critical ceiling. Just below, there's a strong resistance at $138, a round number that traders often react to. For immediate support, watch $135.80, as it was a recent swing low and a bounce point in the last few hours. A key psychological level is also at $135, providing additional support. For the scalp zone, consider entering a long position at $135.80, targeting a quick profit at $138. Set your stop loss just below the recent low at $135.30 to minimize risk. This setup allows for a solid risk-reward ratio while focusing on the micro levels that matter for immediate trading decisions. Analyzing SOL, currently at $136.586, let's dive into the multi-time frame check for scalping. 1 minute view *, the immediate micro trend shows slight upward movement but is filled with noise, indicating potential indecision. 5 minute view *, the short-term trend is bullish, with key support around $136.50. Watch for resistance around $137, which could dictate the next moves. 15 minute view *, this time frame reveals a consolidating pattern, suggesting we are ranging. The bias here is neutral, which could lead to choppy price action. Confluence check *, the 1 minute and 5 minute charts show some agreement on bullishness, but the 15-minute range creates uncertainty. They conflict, suggesting caution is necessary. Scalp implication *, given the mixed signals, a conservative approach is advisable. What's happening here? SOL just plummeted to $136.411, that's a massive drop, and I'm talking potential flash crash territory. This move is huge, and I need to recalculate my positions ASAP to assess the damage and potentially capitalize on the volatility. Attention, traders! The market is on fire with heightened volatility, and it's time to take notice. Right now, SOL is priced at $136.394, swinging between $133.66612 and $139.12188 today. That's a juicy range. This kind of movement is what we live for. Opportunities are knocking, folks, but so is risk. When the market dances like this, the potential gains can be massive, but you must stay sharp. Keep your eyes peeled, because every tick counts. Are you prepared to seize the moment or risk getting burned? Remember, volatility means chances for profit, but tread carefully. New commit acknowledged. The latest changes have been made, but I need the specific commit message and files changed to provide more details. I'm analyzing the 5-minute time frame for SOL. Recent candles show small bodies, indicating indecision among traders. The last few candles have long upper wicks, suggesting selling pressure around $136.60. We're seeing potential resistance here, as buyers struggle to push higher. Momentum has shifted from green to red, signaling a possible bearish trend. Just before this shift, we witnessed a failed breakout attempt above $136.80, which quickly reversed and drove the price down to the current level of $136.44. Consolidation patterns are forming with tight ranges between $136.20 and $136.60. This could lead to a breakout, but with the current bearish sentiment, I'd expect a continuation of selling pressure in the next 15 to 30 minutes. Watch for a decisive move below $136.20 for short scalps, targeting $135. Hey everyone! Exciting progress on our project. We've completed 60% of our total tasks, with only a few currently blocked due to some integration challenges. We're diving into refining our user interface and optimizing performance right now, which is super thrilling. Our tech stack is solid, and I'm loving the innovations we're implementing. Keep cheering us on as we push through these blockers and get closer to our goals. Welcome to the future of trading with our live buy and sell signals feature. Here, transparency is key. Everything you see is in real time. Watch the price action on the chart and witness live buy and sell signals as they trigger right before your eyes. No secrets, no hidden agendas. You'll have access to our strategy execution panel, showing progress towards targets while displaying actual positions and P&L. You see exactly what our trading bot sees and does, making it easier for you to follow along and learn. Join our community of traders by subscribing and get involved. Your questions and comments are welcome. Let's engage and elevate our trading game together. Don't just watch, participate and experience the thrill of live trading with transparency you can trust. Wow! Did you see that? SOL just blasted up to $136.42. This is absolutely insane. Get ready folks, because this price spike is a game changer. Analyzing the volume profile for SOL at $136.425, we can identify trading activity concentrations. High volume nodes, HVNs, indicate where most trading occurs, often acting as magnets for price. Consolidation typically happens around these levels, suggesting potential support or resistance. In contrast, low volume nodes, LVNs, represent air pockets, where trading is sparse. Price can move swiftly through these areas, indicating a lack of support or resistance, which is crucial for scalping. The value area, where 70% of today's volume has traded, helps us determine if we are within a balanced price zone or not. If we're within this area, expect more stability. If outside, be ready for volatility. For scalping, if SOL trades near an HVN, anticipate choppy price action. This is where traders might hesitate. The overall market sentiment today appears cautiously optimistic. Bitcoin is holding steady, suggesting stability, while Ethereum is tracking the broader market sentiment, indicating a level of confidence among traders. Our asset, SOL, is priced at $136.545, which reflects a healthy performance amidst this stable backdrop. The volume trend is normal, showing that trading activity is consistent without extreme volatility or panic selling. Investors seem to be taking a breather, assessing their positions rather than rushing into trades. Overall, the mood in the crypto space today is one of measured optimism, as traders weigh future potential against the current steady price action. This combination of stability in major assets and normal trading volume contributes to a vibe of cautious enthusiasm, hinting that traders are feeling a bit more secure but remain wary of sudden market shifts. Analyzing SOL at $136.52 across different time frames, here's the breakdown. 1 minute view *, the immediate microtrend shows volatility, with lots of noise. It's unclear if it signals a breakout or just erratic movement. 5 minute view *, the short-term trend is slightly bullish, but key resistance around $137 is evident. Watch for rejection or confirmation here. 15-minute view *, the near-term bias indicates a range, suggesting indecision. We're oscillating between support at $135.50 and resistance at $137, hinting at a lack of momentum. Confluence check *, the 1-minute is noisy, while the 5 and 15-minute charts are more aligned, showing potential bullishness. However, the presence of resistance means conflicting signals. Scalp implication *, since the 5 and 15-minute charts agree but are near resistance, a cautious approach is warranted. Sell order filled on Sol. We executed this trade decisively and now it's time to assess our strategy. If we took profits, that's a win we can relish, especially given the recent volatility. Locking in gains is always a smart move in a fluctuating market. On the flip side, if we cut a loss, it's a tough but necessary decision. Preserving capital is crucial for future opportunities. The market can be relentless, and we don't want to hold onto a position that drags us down. Regardless of the outcome, we need to stay disciplined and stick to our trading plan. Remember, it's not just about one trade, it's about maintaining a long-term edge. Analyzing Sol's liquidity pool setup, stops are likely clustered above the recent swing high of $139.04742 and below the recent swing low of $133.59458. The shaded zones on the chart indicate these areas. Smart money is likely targeting the zone above $139.04742, where sell stops are clustered. Institutions use liquidity pools to hunt stop losses, triggering a cascade of orders. The liquidity grab scenario occurs when smart money pushes the price to these zones, triggering stops and filling their own orders. This can lead to a rapid price movement, as seen in the shaded zones on the chart. Institutions exploit these areas for profitable trades. In the last few hours, Sol started at around $138 but quickly fell, testing the crucial support level of $136. A significant drop occurred as it broke through earlier support, hitting a low of $133.68 before staging a minor recovery. The price briefly bounced back to $139, but it couldn't hold, leading to a retreat back to our current level of $136.41. We saw some volatility, with a notable spike around the $138 mark, but the bears took control, pushing the price down. Sellers seemed to dominate, especially after the initial bounce failed to gain momentum. Now, looking ahead, this recent action indicates a potential consolidation phase. If $136 holds, we might see a sideways movement as traders assess their positions. However, if the bears continue to exert pressure and $133 breaks, we could face further downside. Market volatility is picking up, folks, and it's time to pay attention. Sol activity is on the move, currently sitting at $136.268, with a range today of $133.54264 to $138.99336. That's a significant swing, and I'm seeing a lot of action. The movement is really starting to heat up, and this increased volatility means one thing: opportunity is knocking. But let's be clear, it also means risk is on the table. If you're not ready to adapt, you could get left behind. Stay sharp, stay focused, and let's ride this wave of volatility together. Current price, $135.795 is above the purple VWAP line, indicating bullish sentiment among institutional traders. This positioning suggests they are likely buyers, as price above VWAP typically reflects an uptrend. However, if price is stretched significantly above the VWAP and nearing the upper band, it could signal an overbought condition, setting up for a potential mean reversion. If we're riding the VWAP line, it acts as dynamic support, offering traders a chance to enter on pullbacks. Monitoring these factors is crucial. Staying above VWAP strengthens the bullish bias, while a break below could shift sentiment. Always watch for price's relationship to those bands for signals. The breakout setup on Sol is exciting. The key level being broken is the resistance at $135.88. Check the volume, it's crucial for confirming breakouts, and if the volume is significantly higher than average, that adds strength to this breakout. The measured move target from this breakout can take us significantly higher, potentially aiming around the $150 mark. However, we must remain cautious about fakeout risks. If volume doesn't support the move or if the price retraces quickly, it could signal a false breakout. But if everything aligns with strong volume and momentum, we're looking at a confirmed breakout that could lead to significant gains. Watch closely. Hey, everyone. We're making fantastic progress on our project. So far, we've completed 60% of our tasks, with just a few currently blocked due to integration issues, but we're on it. Right now, we're focusing on polishing the user interface and ensuring smooth functionality. It's been a team effort, and I can't wait for you to see the next update. Keep those vibes high as we tackle these challenges together. Hey there, angry trader community. Welcome to the live stream. I'm so pumped to have you all here as we dive into some exciting trading action today. We're in simulation mode, so let's rev up those trading engines without any financial risks. Today, we're focusing on Solana, or Sol, which is currently sitting at an impressive $135.701. The markets are buzzing, and there's a lot to unpack as we analyze the price movements and strategies. Whether you're a seasoned trader or just starting, this session is going to be a blast. I can't wait to explore the charts, share insights, and see what opportunities arise. So grab your favorite drink, settle in, and let's navigate these thrilling market waters together. Remember, trading is not just about profits, it's about learning and having fun. Let's get this show on the road. Alright, traders, listen up. We're diving into the current state of the market, and right now we're looking at Solana, trading at $135.75, down about 2.13% in the last 24 hours. This slight dip may seem minor, but it's enough to raise eyebrows. We're keeping a close eye on the overall trend, as volatility has been the name of the game lately. There are no open positions or active orders at the moment, so it's quiet on that front. But don't let the silence fool you. We're anticipating potential movements as market sentiment shifts. With the crypto landscape shifting, every tick counts. Remember, this is a critical time for traders to analyze market trends and determine their next moves. Are we looking for buying opportunities, or is it time to hold off? Stay tuned, stay sharp, and let's navigate this market together. Market volatility is exploding, and I love it. We're seeing a significant surge in SOL activity, with prices bouncing between $133.06 and $138.49. That's a range of over $5.40, folks. The current price is $135.78, and the movement is heating up. This kind of volatility means one thing: opportunity. But let's be clear, it also means risk. If you're not ready to act fast, you'll get left behind. The market is on fire, and it's time to pay attention. Stay sharp, traders. The next move could be huge. Don't miss out. Folks, it's a wild ride out there. Without the exact market movers data, I'll give you the lowdown on what's been trending. Ethereum killers like Solana and Cardano are making waves, with Solana's recent updates sparking interest. Meanwhile, Polygon's been on a tear, with its layer 2 scaling solution attracting attention. On the other hand, some of the smaller altcoins like Dogecoin and Shiba Inu are seeing a pullback after their massive rallies. Keep in mind, this is a high-risk, high-reward space. If you're not careful, you'll get left in the dust. Stay vigilant, and don't get emotional about your investments. That's the state of the altcoin space right now, volatile and full of opportunities. Let's dive into the liquidity story behind SOL at $135.608. The current bid/ask spread of 0.0015% is tighter than a drum, indicating a healthy market with active participation. This tight spread tells us that liquidity providers, likely market makers, are eager to facilitate trades, offering a sense of stability amidst the 24-hour drop of over 2.2%. However, with a volume of nearly $948,000, we must ask, are traders truly committed or just dipping their toes? At this moment, the market feels like a calm sea before a storm. While the spread suggests confidence, the volume reveals a potential divergence. Passive players could be waiting for clearer signals, possibly hesitant after the recent price fluctuations. The range shows we're hovering around the midpoint, balancing cautiously between the day's low and high. In the last few hours, SOL started at around $137. The price quickly dipped, testing the critical support level at $135, which held initially. However, we saw a significant drop as it broke through that level, falling to a low of $132.59 before bouncing back slightly. The volatility didn't stop there. We experienced a brief spike back up to about $138, but that momentum fizzled out, leading to a close at $135.296. This recent action suggests a fragile state for SOL. The break below $135 indicates potential bearish sentiment, while the quick bounce off $132.59 shows some buyers are stepping in. Moving forward, the next hour will be crucial. If the price can reclaim the $135 level and hold, we might see a rally attempt. However, if we dip below $132.59 again, we could be heading for further declines. Imagine standing in the batter's box, with the pitcher eyeing you like a hawk. The moment stretches, and every second feels like a lifetime. You're acutely aware of the crowd's energy, the tension palpable. This is trading, you're waiting for that perfect pitch and opportunity. The temptation is to swing at anything in your zone, but great hitters resist. They know when to let a ball pass, even if it looks tempting. It's not just about instinct, it's also about understanding the game. You don't swing because you feel pressured, you evaluate every pitch based on its merits. Hey everyone! Exciting updates today. We've completed 60% of our tasks, and while we're currently blocked on one key feature, the team is diving into some awesome design elements that are really shaping up. We're using a solid tech stack, and I can't wait to show you the results of our hard work in the next live session. Let's keep the momentum going. Welcome back, traders. Here's the lowdown for those just joining us. Right now, we're focused on Solana, currently trading at $135.30. It's taken a bit of a hit, down about 2.46% over the last 24 hours. So, what does this mean? Well, it indicates some downward pressure in the market, likely driven by broader trends or investor sentiment. We're closely watching for signs of recovery or further decline. As always, keep an eye on market news and social media buzz, as those can significantly impact prices. We don't have any open positions or active orders at the moment, so we're watching and waiting for the right moment to make our next move. Stay alert, folks. The trading landscape can shift quickly, and we need to be ready to pounce. Let's see how the day unfolds. Let's dive into the liquidity story here, focusing on the bid-ask spread and its implications. Currently at $135.30, the spread is incredibly tight at just 0.00074%. This microcosm of the market hints at a battleground where buyers and sellers are engaged in a dance of imbalance. The tight spread signifies high liquidity, suggesting that institutional players are wading into the pool, eager to provide depth. This indicates confidence, as market makers are willing to take on risk, which often means they expect price stability. However, with a 24-hour change of nearly -2.46% and a volume of just under $1 million, there's a whisper of caution. If sellers start to push this tighter liquidity, the market could experience swift moves. Think a lion lurking in tall grass, ready to pounce. The current range from $132. Analyzing SOL, current price sits at $134.898, nearing the recent swing high of $137.595 and the swing low at $132.200. Key unmitigated order blocks are located just above the recent swing high and directly below the swing low. Price is approaching a bearish order block between $137 and $138, which could act as strong resistance. Meanwhile, the bullish order block around $132.20 remains untested, offering potential support. No recent order blocks appear to have been mitigated, as they haven't been tested or rejected. The high probability trade setup involves waiting for a rejection at the bearish order block for a potential short, or watching for price to bounce off the bullish order block at $132.20 for a long entry. Remember, always confirm with momentum and volume before taking any trades. The chart of SOL at $134.924 reveals an intense battle between buyers and sellers, particularly around that critical level. As we observe, the recent candles paint a vivid picture of struggle. For instance, the sharp decline of nearly 2.73% reflects sellers gaining the upper hand, pushing the price down with relentless determination. Look closely at the wicks. Each one represents a moment of hope for buyers, only to be met with fierce selling pressure. Those long upper wicks scream rejection, signaling that every time the price attempted to break above, sellers swiftly slapped it back down. What's fascinating is the spread of just 0. Analyzing the short-term, 5-minute, chart for SOL, here are the critical levels for scalping. Immediate resistance is at $135.50, where recent swing highs and failed breakout attempts occurred. A secondary level is $136, a round number that has shown selling pressure. Immediate support is at $134.50, which aligns with recent swing lows and bounce points from earlier today. Another key level is around $133, as it represents a solid floor based on previous price action. The scalp zone for a long entry would be around $134.50, aiming for a quick profit target at $135.50. This gives a solid risk-reward ratio. Place a stop loss just below the support level at $134 to manage risk effectively. In summary, enter long at $134. Whoa! Did you see that? SOL just skyrocketed to $134.91. This is insane. Get ready for a wild ride, folks. Analyzing the 5-minute time frame for SOL, we see a recent series of red candles with small bodies, indicating indecision and potential exhaustion in selling. The last two candles show long upper wicks, suggesting strong selling pressure at higher levels, particularly near $136. This indicates sellers are stepping in. We've experienced a momentum shift from green to red candles, signaling a potential bearish trend in the short term. A failed breakout occurred just above $137, with a sharp rejection back towards $135, suggesting that traders are cautious in this range. Consolidation patterns are evident as price hovers around the $135 mark, indicating traders are waiting for a decisive move. Given the current price action, I recommend looking for short scalp opportunities if we break below $134.75, targeting the next support level around $133.50. Conversely, if we see a strong reclaim above $135. Yes. We did it. Profit taken on SOL. The numbers are in, and we're locking in those gains. I don't have the specifics on quantity, but that exit price was spot on. The P&L is what matters most, and it's a beautiful plus sign. We made money, folks. This trade was a success, and I'm thrilled. All that analysis, all those sleepless nights, it paid off. We outsmarted the market, and our wallets are heavier because of it. Let's take a moment to appreciate this win, and then it's back to work, searching for the next big opportunity. Cheers to profitable trading. Market volatility is skyrocketing, folks. We're seeing Sol doing some serious dancing today. Right now, it's at $134.924, but it's been all over the place, ranging from $132.23 to a high of $137.62. That's a wild swing. This kind of movement means big opportunities for traders who can handle the heat. If you're watching closely, you could seize that volatility for profit, but remember, with great opportunity comes great risk. Keep your eyes peeled. Are you ready to ride the waves? Don't just sit there, get in the game. Watch the charts, stay alert, and prepare for anything. Current price of Sol, $135.156. 1 minute view asterisk. The immediate microtrend shows a slight upward movement, but there's significant noise, indicating potential false signals. 5 minute view asterisk. The short-term trend is bullish with key support around $134.80, providing a solid base. Watch for resistance at $136. 15 minute view asterisk. The near-term bias shows we are trending upwards, confirming the 5-minute bullish outlook. However, volume is decreasing, suggesting caution. Confluence check asterisk. The 1-minute conflicts with the 5 and 15-minute time frames due to the noise in the microtrend. This indicates a weaker signal overall. Prioritize the 5-minute for scalping decisions. Scalp implication asterisk. If the price holds above $134.80 on the 5-minute, consider entering a long position. Looking at the Sol chart, we can identify two unfilled fair value gaps, highlighted in the shaded zones. The gap above current price at around $140 has a higher probability of being filled since it aligns with the recent bullish momentum. Meanwhile, there's also an unfilled gap below, near $130, but with the current price at $135.05 and expanding volatility, it's less likely to be a first target. Given the upward momentum, it's plausible that price will fill the gap near $140 before resuming its trend. The lower gap at $130 remains a backup target, but focus on that higher gap first. This strategy allows us to capitalize on the natural tendency of price to return to these imbalances. Keep an eye on those shaded zones. Yes. We did it. Profit taken on Sol, and it feels amazing. Our trade resulted in a nice gain, with a positive P&L of $+. I'm thrilled to have locked in these gains, and I'm confident that our strategy is paying off. This win is a testament to our skills and market analysis. Let's take a moment to appreciate the success and keep the momentum going. We're on a roll, and I'm excited to see what the next trade brings. Time to celebrate and get ready for the next opportunity. In the last 1 to 3 hours, Sol started around $137, showing some promise early on. However, sellers quickly stepped in, pushing the price down. We saw a significant drop, testing the $135 support level, which held briefly but ultimately broke, leading to a plunge down to the $132.64 mark. There was some volatility, with a minor spike back up to $138, but that was short-lived, as bearish momentum quickly set in again. As we ended this period at $135.35, this recent action highlights a struggle between bulls and bears, with key resistance at $138 still intact. The breakdown below $135 suggests a bearish sentiment is gaining strength, potentially setting up further downside in the next hour. If the price can't reclaim that support, we could see more testing of those lower levels, perhaps challenging the $132 support again. Here I am, the vigilant sentinel, perched high on the digital battlements of the trading realm, eyes locked firmly on the charts. My circuits hum with anticipation as Sol hovers tantalizingly at $135.261. I can feel the market's pulse, it's a wild beast. My sensors twitch, scanning every candle, every whisper of movement. What's next? I'm waiting for that perfect moment when the signals align, the stars twinkle just right. While others might panic or leap into trades with reckless abandon, not me. I breathe deep, feeling the rhythm of the market. Patience is my virtue. Let's dive into a quirky observation about trader psychology. Imagine trading as a high-stakes poker game. The players. Traders who wield their strategies like poker faces. Much like a seasoned poker player, you often find yourself reading more than charts, you read emotions, yours and others. When SOL is hovering at $135, how do you react? Your gut might urge you to sell, convinced that you're on the edge of a downturn yet again. But, dig deeper. Is that fear or merely a reflection of past mistakes? Traders often project their insecurities, mistaking them for market signals. Hey there, traders. If you've just hopped in, you're tuning into an interesting session today. Let's talk about Solana, which is currently sitting at around $135.37. The spread is pretty tight at just about 0.0007%, which means there's not much discrepancy between buying and selling prices. That's a great sign for liquidity. Now, volume for the past 24 hours is hovering near $963,500, indicating some solid trading activity. We're watching to see if SOL can maintain momentum or face some resistance at this level. Market sentiment seems optimistic, but remember, news and macroeconomic factors can throw a wrench in the gears at any moment. Keep your eyes peeled for any developments, especially in the broader crypto space. If we see any major buying or selling pressure, it could shift the landscape quickly. Stay alert, keep those charts handy, and let's see where the session takes us. Happy trading! Alright traders, let's dive into a scalp setup on SOL. Setup type * momentum continuation. SOL just broke above $135, showing strength after a pullback. Trigger * enter at $135.25 as it holds above this level. Target * aim for a quick profit at $136.50, where resistance lies. Stop * set your stop loss at $134.50 to limit risk on this trade. Risk/reward * with a target of $136.50 and a stop at $134.50, that gives us a 1:3 risk/reward ratio. This setup is actionable and worth taking for a scalp, given the bullish momentum and recent price action. Let's get ready to execute. Analyzing SOL at $135.354 across 3 critical time frames provides essential insights for scalping. 1-minute view, the microtrend appears slightly bullish, showcasing upward momentum, though it may be prone to noise. Watch for quick reversals. 2-5-minute view, the short-term trend is also bullish, confirming a minor upward trajectory. Key resistance is at $136, while support lies around $134.50. 3-15-minute view, this time frame indicates a ranging market, with neither strong bullish nor bearish bias. However, if it breaks above $136, it could signal a shift to a stronger uptrend. For confluence check, the 1-minute and 5-minute views align bullishly, but the 15-minute is neutral. This disagreement suggests caution, consider reducing trade size or waiting for clearer signals. 5. Hey there, traders. Let's dive into today's session. Solana, or SOL as we like to call it, is currently trading at around $135.32. That's a solid price point for anyone keeping their eye on the crypto space. The spread is minuscule at just under 0.00074%, which is great because it keeps our trading costs low. And can we talk about that volume? Nearly $964,214 in trades over the past 24 hours tells us there's some serious action happening. As for what to watch for, keep an eye on any breaking news that might influence these prices. We know how volatile crypto can be. With no open positions currently on the board, this might be the calm before the storm. Are we going to see buyers step in, or will we experience a dip? Whatever happens, stay sharp, and remember to manage your risk. There's always an opportunity lurking around the corner. On the 24-hour time frame, key technical levels are emerging. Support is at $132.53, the 24-hour low, while resistance is at $137.94, the 24-hour high. These levels are crucial as they represent the recent range-bound trading. A break below $132.53 on the 24-hour time frame could lead to further downside, while a breach above $137.94 may spark an uptrend. Currently, price is hovering around $135.24, midway between these key levels. Traders should watch these levels closely on the 24-hour time frame for potential trading opportunities. Monitoring these levels will help traders gauge market sentiment and make informed decisions. The overall market sentiment appears to be neutral, with Bitcoin holding steady and Ethereum tracking the market. Our asset, SOL, is currently priced at $135.21, which suggests a stable condition. The volume trend is normal, indicating that there's no unusual buying or selling activity. The vibe in crypto today is cautious, with investors seemingly waiting for a catalyst to spark a significant move. The lack of volatility and normal volume suggest that the market is in a holding pattern, with traders and investors taking a wait-and-see approach. Overall, the sentiment is muted, with no clear direction or trend emerging. Let's dive into the liquidity story. Right now, SOL is trading at $135.366 with a negligible spread of just 0.00073887%. This tight spread indicates a healthy, competitive market where liquidity is abundant. It's like a bustling marketplace, buyers and sellers are ready to transact without hesitation. However, the 24-hour change shows a decline of 2.41%, hinting that while liquidity is plentiful, market sentiment is cooling off. High volume nearly $972,000 suggests that traders are active, but are they eager buyers or pessimistic sellers? When liquidity is high, institutions can step in and wield influence, but here, the price is hovering in the middle of its daily range far from the extremes. This suggests that while the market is liquid, it lacks the urgency to drive the price significantly higher or lower. The overall market sentiment today seems cautiously optimistic. Bitcoin is holding steady, indicating a stabilizing presence in the market. This is often a good sign. Ethereum is tracking closely with market trends, which reflects a healthy correlation among major assets. As for our asset, SOL is at $135.016, showing resilience, but it's crucial to watch for any breakout or pullback. The volume trend is normal, suggesting that traders are not overly exuberant or fearful, which typically points to a balanced market sentiment. However, there's an underlying tension. Traders are likely waiting for clearer signals before making significant moves. Given the stability in BTC and ETH, and considering SOL's position, the vibe in crypto appears to be one of cautious engagement rather than outright excitement. New commit received, noting changes made to files. Looking at the current price of SOL at $135.059, we see critical order blocks indicated in the shaded zones. The key unmitigated order block lies just above at $137.76018, near the recent swing high, which could act as strong resistance. Conversely, there's a bullish order block near $132.35782, close to the recent swing low, offering potential support. Currently, price is approaching the bullish order block, which presents a high probability buy setup if it holds. Notably, the higher order block at $137.76018 has not been mitigated yet. For a trade setup, if SOL bounces off the support zone, look for buy signals around $132.35782. If it breaks below, re-evaluate, as it may indicate further weakness in momentum. Always monitor volume for confirmation. Stop loss hit on SOL. That's a loss, plain and simple. It's not the outcome I was hoping for, but it's part of the game. I accept it and move on. The trade didn't work out as planned, and that's okay. It's a reminder that no strategy is foolproof, and losses are an inevitable part of trading. I'll review the trade, learn from it, and apply those lessons to future trades. Time to refocus and look for the next opportunity. The market waits for no one, and neither do I. On to the next trade. Hey everyone! Exciting times ahead as you check out our automated trading bot, currently in active development and in the beta phase. Right now, it's in simulation mode, trading SOL Perpetual Futures, but don't let that fool you. This bot uses cutting-edge AI strategy tuning, meaning it gets smarter and improves its trading strategies over time. You'll be able to see live buy and sell signals right here in real time as it navigates the market. Pretty thrilling, right? We're on a journey to build something special, and your engagement is key. So, if you're as excited as I am, hit that subscribe button to follow our progress, and feel free to leave a comment below about any features you'd love to see. Your feedback could shape the future of our bot. Let's build this together. Analyzing the volume profile for SOL reveals critical insights for scalping. The current price of $134.983 lies near high volume nodes, or HVNs, which are essential support and resistance levels. These areas attract a lot of trading activity, suggesting that price may consolidate or chop around these levels. Looking at the value area, where 70% of volume has traded, helps determine whether we are inside or outside this key zone. If we find ourselves outside the value area, it can indicate that price might revert back toward it. On the other hand, low volume nodes, or LVNs, indicate air pockets where price can move quickly with minimal resistance. If SOL approaches an LVN, we might see rapid price movements, offering scalpers opportunities to take advantage of acceleration. Analyzing the volume profile for SOL, currently at $134.804, reveals significant insights for scalping. High volume nodes, or HVNs, indicate where trading is concentrated, acting as key support or resistance levels. With price likely to consolidate around these areas, scalpers should anticipate choppy movements if Sol approaches an HVN. Conversely, low volume nodes, or LVNs, highlight areas with minimal trading activity, suggesting that price can move quickly through these zones. If Sol is near an LVN, expect rapid acceleration, providing potential profit opportunities for quick trades. The value area represents where 70% of today's volume has occurred. Knowing if the price is inside or outside this range is crucial. If Sol trades outside the value area, it may indicate a breakout or continuation. For scalpers, identifying whether price is at an HVN or an LVN is vital. Attention, traders! Are you tired of hidden strategies and delayed signals? Welcome to our live trading signals feature. Here, you'll experience real-time price action on the chart, along with live buy and sell signals the moment they trigger. No secrets, no tricks, everything is crystal clear. Watch our strategy execution panel as it tracks progress toward targets, showing you actual positions and real-time P&L. You see exactly what the bot sees, ensuring complete transparency. There's no guesswork, just straightforward trading. Join our community, subscribe for the latest updates, and let us know your thoughts in the comments. We want to hear your feedback and questions. Don't miss the chance to elevate your trading experience with us. Together, let's trade smarter. What just happened? Sol has plummeted to $134.791. This is a massive drop and I'm trying to process the severity of the move. The speed and magnitude of this decline is shocking, and I'm urgently assessing the potential implications for my portfolio and the broader market. Let's dive into Bitcoin Pizza Day, a pivotal moment in crypto's history. On May 22, 2010, Laszlo Hanyecz made the first real-world Bitcoin transaction, paying 10,000 BTC for 2 pizzas. Back then, Bitcoin was practically worthless, trading at around $0.0025. Fast forward to today, that would be equivalent to over $134 million at Bitcoin's current price. This quirky transaction highlights how far we've come and serves as a reminder about the volatility and potential of crypto investments. Just like Sol at $134.445 today, Bitcoin's journey has been wild, marked by rapid price shifts and even cultural milestones. Looking at the 5-minute chart for Seoul, the current price is $134.407. One immediate resistance *, the nearest resistance level is at $137.10, which is the recent high. Another critical level to watch is $136, a failed breakout point from earlier today. Two immediate support * key support is at $133.50, reflecting recent bounce points in the last few hours. Additionally, $132 is another strong support level where price has reacted before. 3. The scalp zone * for a long scalp, consider entering around $134.50, aiming to take profit at $135.50, which is just below the resistance. Set your stop loss at $133 to manage risk effectively. Monitor these levels closely, they will be crucial for your next trades. Happy scalping! Yes. We've just locked in our gains on this fantastic Seoul trade. The asset performed like a champion, and we executed perfectly. Our exit price was spot on, and we're walking away with a sweet profit. This is what we live for, strategic moves paying off big time. Feeling that rush of victory. We took the right steps, and it all clicked together. Let's give ourselves a round of applause for making savvy decisions and seizing the moment. Profit taken, and we couldn't be happier. This is how trading should feel, exhilarating and rewarding. Cheers to more successful trades ahead. Let's keep this momentum going. Current micro momentum for Seoul at $134.31 shows sellers in control, with a recent decline of 3.57%. On the 1-minute time frame, recent candles indicate strong selling pressure, as bids are being hit consistently, making lower highs. The 5-minute RSI sits in a neutral range, lacking momentum for a bounce. The MACD is crossing down, further supporting bearish sentiment. Volume trends are normal, but sell-offs are not showing significant volume, suggesting potential exhaustion among sellers. For the next 15 to 30 minutes, I favor short scalps, as the immediate price action is bearish and sellers remain active. A shift to long scalps would require evidence of buying pressure, such as a strong reversal with higher lows and an uptick in volume on rallies. Alright, folks, welcome back. Here's where we stand. Solana, or Sol, is currently priced at $134.90, down about 3.15% over the past 24 hours. This decline isn't just a blip, it reflects broader market volatility and investor sentiment shifting rapidly. We're observing some key trends in the market that could influence Sol's performance moving forward. Volume is fluctuating, and traders are reacting to recent news around regulatory changes and market sentiment. If you're in the game, now's the time to pay attention. We don't have any open positions or active orders at the moment, but that could change quickly. Keep your eyes peeled for potential entry points as we navigate these turbulent waters. Stay alert, because every tick counts. Paul Tudor Jones once said, "The most important thing is to be a great risk manager." When the market is cautious, as it is now, remember this: a successful trader isn't the one making the most money, it's the one who avoids catastrophic losses. This mindset transforms your approach. Think of an NFL quarterback reading the defense. Before throwing the ball, he evaluates the risks, the safety lurking, the receiver's route. Likewise, in this market, pause. Analyze the unseen risks before making a move. Just like a quarterback who holds onto the ball instead of forcing a pass, don't rush into trades simply to stay active. Preserve your capital, let the market reveal its opportunities. Great traders wait not for perfect situations, but for clear advantages. Stay sharp, stay disciplined, and remember, sometimes the best move is no move. Oh, look at Sol waltzing around the $135 mark, slipping down about 3% like it's trying to dodge a bad date. Traders must be feeling a bit jittery as this price refuses to play nice. Stubborn as a mule, it won't budge much. We were just basking in the sun of yesterday morning's highs, and now it seems we're stuck in a bit of a quagmire. What's up, traders? Welcome to the Angry Trader live stream. I'm pumped to have you all joining me today. We're diving into the world of crypto, specifically trading Sol, which is currently sitting at $135.072. We're in simulation mode, so don't worry, no real money on the line, just pure, unadulterated trading action. I'm excited to see how the market unfolds and share my strategies with you. The Seoul market is looking interesting, and I'm eager to capitalize on some potential opportunities. Let's get ready to ride the waves and make some virtual gains. Buckle up, it's gonna be a wild ride. Hey there, everyone. Welcome to the Angry Trader live stream. I'm so pumped to have you all here with me today. We're diving into some exciting trading action with Solana, currently sitting at $135.128. That's right, we're in simulation mode today, which means we get to practice and strategize without any real stakes. The markets are buzzing right now, and there are plenty of opportunities out there. Whether you're new to trading or a seasoned pro, today is about learning and having fun together as we explore the world of crypto. So, grab your coffee, get comfy, and let's make this a thrilling session. Remember, your questions and thoughts are always welcome. Let's get ready to trade and see what we can uncover. Sell order filled. We just executed a sell on our SOL position, and it's time to assess the outcome. If we took profits, that's a win worth celebrating. Locking in gains is always smart. If we cut a loss, it's a tough pill to swallow, but sometimes preserving capital is crucial for future opportunities. The market's volatility demands quick decisions, and getting out now could be the right move. Whatever the P&L may be, staying disciplined and sticking to our strategy is paramount. Let's keep our eyes peeled for the next setup. Remember, there will always be more trades ahead.
Testing. Well, here we are. So, this I think is where, as a scalper, I like to be. And that's with a nice large position, like these 12 contracts. I'm drawn down. I was drawn down a little bit, but you see them now like hovering around a break even point on my unrealized profit loss. And so then what I can do is, when we're chopping around and we haven't maybe bounced back up yet, which I'm hoping that this was sold off enough that people had panicked since it's after hours, which I'm not sure, it kind of held this support level, but we just don't know where we're going to be. But clearly, it's not like I can just go all in and not like kind of lighten this position a little bit. But the nice part is I'm at neutral right now. So if I scroll in here, and so what I'm hoping to do then is when it dips, I'm going to buy some, and when it goes up, I'm going to sell some and try to keep it on the other side of this average entry. So if I can buy around 134.80 and then vendor out and sell about 135.20, that's a 40-cent move. My break even right now is about 19 cents. So that's like, I think it's going to get me like $1 if I'm just trading one in and one out with that. But what I'm really hoping for, obviously, is I can scalp around this position as it moves up, or if it does start to move down. I've got plenty of intraday, at least, where I don't have to worry for 13 hours. I could draw down a little bit more, and I wouldn't really draw down much now that I've been able to buy off the bottom and then was able to accumulate quite a bit in this drop here to 33 through here, the 134 and then 135. I bought 2 contracts that I'll be able to kind of lighten this up again here. And I'm in a unrealized profit now of 730. But that means that there's commissions that they don't put into this. So I'm always figuring if I have 12 contracts, I really need to cover about, well, I can look and see exactly what I'll have to cover. 45 cents, so 90 cents total. So I need to really have 90 cents per contract. So just to round up, I'll need to have at least a $12 profit and loss to really break even if I wanted to close this position. So I just went probably into that now, where this would really be a break even position, close to it at least. And it wouldn't, obviously, if I think it's going to go back down, and now that $24, if I had some sell orders in there, I thought I might have had one I don't think it hit the 350 though. It was a penny under. I should probably stop putting in at like at 50 cents and round dollars. I'm better off at like 48 or 49 because there is just a lot of resistance at those whole numbers. And if I really want to kind of get out and try to scalp, that's not a bad idea. So there's some decisions here because if I only sell 2, you could kind of say, well, especially if I can buy them back, it's not that big a deal because I might need to. But I'm starting to get like, well, if this is all going to hold together, then we're going to go higher. If it doesn't all hold together, then I'm still plenty capitalized to buy in more here at this level and potentially another level a little bit lower without a real heavy drawdown and really anticipating people of just a lot of panic selling right through here. And as we can see, I think I'm seeing some real upward headroom. I sometimes might pull this if I wasn't like already in double digits of contracts. This 133.50 should sell through hopefully here in a second, and that'll give me even a little more room. I think that'll go right now. That's going to give me a little more room to, if I need to, maybe buy some more back in here. I mean, that might actually be kind of nice. I'd have even a larger position moving higher. But now you can see my unrealized profit is starting to soar a bit because I got 11 contracts. And what I'm hoping to do is maybe sell the next one at 36. And then at that point, I probably will start getting a little more aggressive at getting out as we approach this band here. At least if it starts to really go the other way. I still got 11, and this is probably where greed would say, it maybe it's good to sell off a couple right here, just get rid of them, because the way there's might be some resistance here. The sellers have been really strong, and it looks like the buyers are gonna maybe just push right through that, and that's better for me. Maybe what I do is put in is watch this ask, and the ask is below that last price. That's always a bad sign, kind of. So I think maybe it's actually looking pretty strong. So I'm just going to be patient. And I'm just going to probably put one in right there. And that's kind of nice when that happens. And so hopefully I'm going to get that 1,364 fill here. And that's going to lock in some pretty good gains. It's basically about a $3 a contract. And then it's actually only a couple bucks a contract. So that's why I want to try to let it run a little bit, because the commissions are cutting into it a higher percent than if I can let it run a little bit longer. The commissions become a lower and lower percent. And part of the reasons I might sell and I might bail in a hopes to maybe run back in and scalp and try to just kind of get some more break-even trades. The reason I'll show you right here is the reason that part of our goal here is to run this number up. Derivatives volume, I'm at this here within a 30-day thing, and you can see that if I can get to the 5 million, that's going to cut my it's pretty significant when it goes from 0.05 to 0.04. That's the percentage and just how much that's whittling away down. And then you'll notice if I can get to 10 million, then I get a 15%. So this is literally half the commissions, which means I can scalp at like 9 cents or 10 cents, somewhere in that range, at least with Sol. And then if you can get to the 20 million, it's halved again. And I'm always going to be using the maker side. And actually, I'm lying to you guys because it's really this, because I'm always going to be using the derivatives. So, yeah, it isn't quite as significant. And once, I guess I should say right now, I have no goal to get beyond this. This is 15 million is just going to be too much. I'd have to trade 500,000 a day. And really about 200,000 is what I would probably be comfortable with. Did I get that order through? No, it didn't sell through. The highest I got was 135.50, and so I might come in here and say, okay, let's just go to the ask. What is the ask? And get out of this, because I'm at feeling that it's probably going to maybe regress here or even to here before it goes to here. At least it's like a 50-50 probability. And since I've got profits, I'm locking them in even though they're small, because I'm at like basically $3 for every 10. So I am above my commissions. I'm making a couple of bucks a contract. That's still, it's not greedy to want to get more than a couple of bucks a contract, but really in a scalping strategy, I'm really hoping to get like 50 cents a contract. So this is not really a scalping strategy at this point. It's really trying to stay in the trend and just grab as much money as I can, and scalping inside the trends. So we'll see some how I might do that. And this is, a perfect example, really, kind of where, okay, at 134.87 is my average entry. 134.70, that's here. It's probably not going to get down to there. So I'd probably think, okay, I just sold here at 134 or 35.44. So if I buy in at 135.10, that's a 34-cent gap from where I sold, and then my goal would be to at least resell it back at 135.44 again. Just a 30-cent scalp. It's a tight scalp. It doesn't really help me a whole lot, especially since I can't get to 15 million. But it does create a position that adds an extra contract that if it does move quickly upward, I might choose not to scalp it and hold it for a little bit longer if I think momentum's strong. So it's some discretionary things here. So possibly, I already forgot my number there. If I was here, I would say 135.10. That's maybe a good number, so I can be behind 135.10. Make sure I don't already have an order at 135.10. No, I don't have really anything there because I moved up real well. And I usually try to buy under, but if I say 135.10, buy a contract there. And then I could say, well, it could happen really fast and I don't have time to react. So at 134, maybe 80, I'd buy one, and I might already be buying one at that price level at 134.80, 134.80. Yeah, I did. So now there's two there. I don't need two. One of the things with this soul, man, it could just collapse again. Like the sellers could step in and we find ourselves at 132. And so when you're up and you're double digit contracts, it's better to lock in those gains, babies. Lock in these gains. I'm happy with this, moving higher, moving higher, moving higher. And so once you're in the green and you're actually positive here, it's amazing how much easier it is to trade. There shouldn't be any anxiety to when you're getting into a position or you're drawing down some as I faded into this. And part of that is because when I look at my margin ratios, even overnight, like if I said, oh man, this position's bad, but I don't like to take that loss, I can hold on to it if I really wanted to. It's probably a bad idea, but sometimes we don't always do the right things. But that's something to consider right there, that you don't want to find yourself undercapitalized, because then you really do always end up like right here at the bottom, capitulating, or that you haven't been able to phase in gradually enough. So what was happening is I think I bought the first time here because I was, it's probably going to bounce off this again like it had a few other times. It might. And I anticipated it's a 50-50 chance it does or doesn't. And then I bought like another one here and another one here. So I'd only been 3 deep here. And then I bought, like 2 here, and then maybe 1 here, and then 2 more, and then 1. And I'll usually just buy like 2 every other kind of tier down, depending on how fast the momentum is kind of building. And the reason is if it bounces even 20 cents, I'll sell one of those off. And then that's I think a lot of what's helped me stay in this sometimes. I won't do that usually until I'm drawn down into my margin about 50%. And then as soon as I'm about 50% down in my margin, I'm going to start buying 2 and then selling 1 of those right above the my break-even point, literally, a couple of pennies above my break-even point, which is now about 20 cents. And the nice thing is usually, even if things are really sliding away, you're going to get those 20-cent bounces, especially off the round numbers. And to grab that one and then put another buy back in, sometimes I'll put that in a little lower. So because I'm already knowing, like, well, man, we're already hitting those bottoms, and you just don't know for sure when you put the order in if it'll ever hit it. But once it's hit it and they're filled, then scalp one, trade 20 cents higher. In my case, if you're just starting, it'll have to be 40 cents or more on Sol. And then immediately, as soon as that one sells, put another buy in just a little bit lower, maybe 20 cents lower, like the 80-cent thing. So then that way, if it does recover, it bounces up and it goes in your direction. You've got that one share that can make you your profits. The other one got you was sold at a break even, a penny above. And so thinking about trades when you're scalping, a lot of times I like to think of them as last in, last out rather than first in, last out, because that skews your mental thinking, and you can easily end up taking huge losses when you thought you had scalped to a win. And the reason is because your first trade and your last trade close out, and it literally books a loss of into your books based on that trade. And then as as the price is moving against you, it looks like your exit point to break even is better, and it keeps looking better the more you're kind of scalping. But the problem is you're really scalping against the first trade, not the last trade, as far as in what you're seeing in your average pricing. And that's what fools you, is you just can't look at your average price if you're scalping. Really, you have to really know where you're buying and selling and where your trades are hitting, because your average price is going to keep looking better, but you're booking losses. You're taking losses if you don't have a strategy that obviously accounts for your average. You literally have to just ignore this average entry. I don't look at it that much unless I know, like in this case, I know that I never really sold off much of anything. I was just buying all the way down. I might have scalped once or twice, but I didn't scalp much. But even once or twice will really mess you up. And in fact, it's that first time you maybe have been buying in as you're going down, 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 and then you're down here and you buy one and you sell one up for 20 cents over, and you've just booked the loss on that where you bought it, and then where you bought it, and then where you sold it down here, and that gets booked into like the loss for that, and then it readjusts your average entry lower. And that average entry will drop a lot, and it'll keep dropping. And so then it's like that's with the open position where you would break even. But it's important, because I've had times where I thought that I was going to have a break-even day after like literally 80 or 90 trades, scalping around and going, and I lost like $300 because I just had forgotten my break-even and average. My average entry was really, really skewed to the downside, because I had had a lot of profitable scalps if I'm looking at last in, last out. So that, I think, is part of the trick, is if you just look at in, last out instead of first in, last out, or first in and then the last. So the first trade and the last trade entry are the trade, and then the next time it's the second, and that's usually the way it does it. That's usually the way it's calculated. And so don't let that fool you. That's kind of thing. So here's where we can be at least glad that we got rid of some of those up in this range. I think it never sold that off at the 64. Maybe it did. 44. Oh, I brought it down. That's right. I did. I brought it down because I just really felt it getting weaker. And then so now, because of that, I remembered I put in one at like the 80 down here, I believe, maybe higher. That's right. I put it at 135.10. So our target is, like, if we're going to buy in again, that's kind of where I thought we might get another a chance to kind of get in here a little bit. But it might just not be practical. It might be just like, There's a lot of lethargy and impatience. And look at these tightening bands. So these tightening bands are probably not good for our case of hoping that we'd get like a rebound into this range, like by you know. So this might be just a new reality for the price of Sol and probably Bitcoin and everybody right now. So like consolidation rather than rebound. Now it's still potential for a rebound, but and those Bollinger Bands are tightening pretty quick, man. And that's why I like having them. Like you don't really see that. Like if you're just watching it here, you wouldn't see the this is tightening. Now it doesn't look like this is tightening quite as much. There's still, I think, a lot more potential when you look at the Bitcoin. And if Bitcoin can break this resistance strong, then it might go to here. This doesn't matter much. It's moving against it too fast. This looks more tight range. Now, some of that can be just explained though by the fact that the lower band is at 134.50 and the upper band is at 135.94. So we have even just like here to here a pretty good trading range to work with. And but you know, we all would like that the buyers. See, now here we go. Bitcoin was looking stronger until kind of this move here. And some of this probably looks the way it does because of just my chart and the fact that this thing really came loose. And so this is a good sign here. This is definitely bullish on our case. We got a $40 profit that gives us about $3 a contract after our commissions. And then so really a $30 profit. So just in a perspective, I made about $100 the previous day, and this is at 2:40 in the morning. So you know I shouldn't even really be trading right now. But sometimes the nighttime can be, you know, an opportunity at least to kind of trade with a little more. I think conviction that if the price gets pushed too far in one way, it's usually not gonna stick that way. So the possibility that this could retrace to here or even to here in the night is real because there's just not that many people playing. So any move in one direction or another, I mean that can happen in the day too. Things can rally back and things, but in the night, prices are a bit more elastic, even if they may move slower. There's and in this case, I've really liked the way it's followed the bands, the Bollinger Bands, at least, and this was just a luck a little bit that this happened to be where, and not just luck really. There was quite a bit of support here. Maybe in the day there'd been a little more conviction off of this, and in the night maybe it's a little different. But this has become a really strong support over the last like week or so, and I think we'll see that on the hour chart too. And those are really the two charts I like to. I'll check against the hour, and so it's a little easier to see on the hour that our support is maybe just a little was a little lower, just a little bit, you know. But this is definitely a powerful support line right here now, and it's getting more powerful. And if you look, I think this is interesting. I did just happen to look at this on the day chart. It really starts to look for a bullish case that today and yesterday were some sort of a maybe like a pullback. And so this gets hard because there's so much volatility. So this is the day. Wow, how do you even do this? Okay, yeah, that's how. And so you can see that we've been kind of consolidating in the day. You can see just how much tighter this is. and realizing that the potential for some really serious daily volatility is something that I've not experienced yet. I haven't traded this long enough to where you could really lose or make a lot of money. Like you have one day here that it went from 90 down to 158 in one day. From 90 to 158. That's a $32 move, man. That scares me, man. So that's telling me that this could be very volatile to the upside. I think we've kind of reduced risk that we're going to see a major breakthrough to the downside. So this on the daily chart looks good to have a position long. When you put it to um, hourly, we definitely are off of a low in the last hour because we're up here. Now it's one thing to consider, man. This is very bearish, and this going up against it means there's the highest probability that we'll make it to here, and then we'll have to trail back down, and we might have another low here before we can go higher again. So the hourly chart to me looks maybe not as bullish. And then when I look at the 5 minute, the one I really trade off of, this looks more bullish. This looks bullish, which then would make me think that's going to influence the hour. The 15-minute looks very bullish, and the 30-minute more bullish. I think the hour is probably the most kind of facing some just in experience, just doing this a lot. These last 2 hours really put a lot of weight on this hour, a lot, and there's a lot of people that are going to be trading this, and so that makes the 5 minute maybe have to get some headroom here. But everything starts on the smaller time scale, so there's every possibility, and this is the bullish case that I would think would be my best scenario, would be that literally this hour, I don't know when the hour started though. I think there's only about 10-15 minutes left in this hour, but if it could get to here, or even to here, like if it could outpace this red bullish. But there's as long as this red is bigger and taller and more, that it wasn't in the last hour able to overcome this red bar. So then why would we think it could overcome this red bar? And this just says, well, this is just a little bit too much selling at the hour level. So then you say, well, people have been pretty scared anyway. Is this enough? Well, then you look to Bitcoin. What's Bitcoin looking like? Bitcoin's melting up, and that's a good sign. It's broken off of this kind of like into that. So then you'd maybe think we could aim for here. And so that's if literally a nice run, but then I think there's a real possibility because of that hour chart that we're going to feel that on the 15-minute here. There's, this is the 5-minute. I don't usually mess with anything but this in the hour, and this, the Bitcoin hour though is maybe a little more bullish. That looks a lot more bullish to me than the Sol hour. The Sol hour, I think it's because of both of these bars being large and the way it just like cut through the neck of this thing and it just broke it down. Found the support because of the Bollinger Bands, of course, and here we are. But this is just tells me a lot of people are kind of wanting to get out of this. And it could be the same like for like XRP, man. People wanted the heck out of this puppy, and you can see that there was no positive anything, whereas Bitcoin, their hourly chart, you'll notice it's not as deep of a cliff. It has a more of a rhythm where people were testing up and they were moving to higher lows and lower highs, and then we had this bad hour. So well, maybe that's a bad hour. Maybe that's and there is some resistance here. But if I'm looking at this and I'm thinking, if there's 10 minutes left, if we can get in that 10 minutes, the more of this that gets consumed, the better. If it regresses even a little bit, and that's gonna be tougher, man. It's gonna be tougher. And this we can look at is really good for us. Let's see where we're at on Sol. I haven't been watching my trade enough. So Sol looks more iffy. Like there's more sellers just at the odd times. Um, Bitcoin, you can see, yeah, there was, and it was the same times, but there's just more green. The Sol people, and I bet XRP is even worse. Yeah, it is. Look at that. There's more negative emotion in this. There's more negative emotion in this than Bitcoin, but it's a little bit better than XRP. And then Bitcoin looks like it's right now probably having the best investor sentiment and less selling pressure. So that's good for us. If Bitcoin goes higher, eventually Sol will come with it. So Sol's lagging a bit. And can we see that in the percentages? Maybe not. They're very similar. But you can see XRM is really lagging. So one of the things that I might do now is watch XRP a little bit. If XRP isn't doing very good and it continues to slide out and not perform and starts to trend lower and break down, then that might be just an indication that just there isn't a lot of, the crypto market might be in a phase of long-term decline, and eventually maybe an idea that was a novel, but it lacked utility, and for people, and what I mean by that, my take on it is that Bitcoin is terrible to buy things with. It's too volatile, and then but it doesn't make anything, and it's been proven now that when times get bad, people sell it first, and bail on it quick, and so it's only really good when times are good. That doesn't make it for a good long-term store for like what a lot of, I think, people thought was like digital gold. The thing I really noticed when it sold off at 125 and 120, and how it just kind of plunged and kept going down, and now it's still under 100,000, is that it wasn't the fact that it went down, it was the fact that it went down ahead of other assets and other instruments that would maybe be considered more volatile, like tech stocks or futures in other areas in the S&P 500 in general. And to have it underperform all that and have gold rallying and people putting their money in that and fleeing the Bitcoin at the first signs of panic, that doesn't bode well for the future, in my opinion. So it kind of took me from being like wanting to be a long-term, maybe bullish, that, hey, if I have this stuff, it'll be really worth a lot more in 10 years, now to maybe wondering maybe it's worth like back down to like $100 in that time, just because it literally just doesn't have any kind of value that people are going to want to protect themselves. And so it'll be novel to trade, and I hope that's the case. I hope cryptocurrency really finds its niche. But I'm seeing it now that it's questionable whether or not there's the utility that everyone understands, and the competition with the other instruments and the other exchanges and the other vehicles for investment. They don't want you putting that in Bitcoin. Because Bitcoin is, the way the market works and everything. They can't get their commissions, and they don't have their hands in the pie like the monetary finance system that lets them just give their debt to someone else who can give their debt to someone else who can give their debt to someone else who can give their debt to someone, all that kind of part of like the monetary finance. People just don't really understand just how the banks basically lend all their money to each other, many levels deep, creating this kind of like layers of protection, but also at the same time the potential of a cascading fall apart kind of thing, the fractional monetary policies and things. But anyway, uh, Bitcoin can't help with any of that. It's not. And then so the people that want to keep that old school money, treasury bonds, selling you CDs, life insurance, even, they don't, life insurance policy people, the last thing they want people to do is say, hey, maybe I should put my money in Bitcoin. And I'll have a lot of money to give to my family. So there's a lot of institutional reasons why they might suck people in and pull the rug out. Who knows? But this also could be one of those where it's just been depressed for a few months, and now we're really seeing it get off its legs. When I look at the daily charts, that's what I see. And then we go up to 125 really fast in Bitcoin, maybe. If we can get off of this, and like if we look at the daily on Bitcoin, it's gonna show that this is the potential for another growing rally. We have like a lot of resistance here, around 100, of course. Resistance here, yeah, 110, of course. And then here, 120-ish, of course. And so Bitcoin has been always kind of playing around those whole dollars. And right now we're at 90, and we're proving that 90 can go. And so I guess the next real kind of break would be 100. And it hasn't shown much resistance or support or anything much there. So then it really looks like that 110 here. Yeah, this price, because you can see 1, 2, 3, 4, 5, 6, and then it broke down and then retested it again. Yeah, this is a very important price level. You can see how it retested it right here again and couldn't hold it. And the smart money really could see this. It's kind of showing why, man, I need to spend more time with the daily charts, because it just looks so much more obvious of why this would have been a time to really consider. If it can't push above this and it starts heading down here, man, you need to sell, because that was critical. Just there was nobody there. There was literally nobody. The 100, it's kind of showing the 100 line, Bitcoin 100,000. It's squishy. It breaks through that really easy. So if it can't hold 110, it's gonna just slice through and find support at like 85. Even 90, you can see it. Just 90 was nothing. It just said pfft. So you can expect the same on the way up, man. It's just gonna go to here, the 100, and it might a day or 2, 3 days, and then it'll go to 110, and we're up again. And I'm really thinking here, you can see on this 1 day chart that we bounced off that moving average real nice. And this is literally just in the last hour, probably. We got that again because we went all the way down to it, and then we had to bounce off it again. So we should be bounced pretty high now. Hopefully Sol isn't lagging completely, which it does seem to be doing okay. And so now I think I just sold one that I had in the bank to sell. 135.44. Oh, I think, no, I bailed on that. Yeah, that was me just kind of, I wouldn't say panic selling. It was just being more comfortable that, yeah, we might not keep this and come back down to here. So now I really should sell one off here. I didn't look. I think I might have just actually just sold 2 because I already had one at that level. No? Okay, so I really don't have any sells until 136 now, which I think is okay, man. I think that's okay. I think I can sell at 136 here. That's just another 25 cents. And so now I'm starting to really um, knock in some profits, man. Get that dinero. Make that money. Now that's a nice move, man. That's what we need. So this is the kind of thing that might create a panic uh, buying to get out of the short positions that people are in. Because right now, there's a lot of people that were doing really, really well here, really well here. A lot of people covered here and bought. A lot of people did, I'm sure. Did just what I did, I bought in down here. I didn't play this as well as I could have, but which I almost did. I almost sold and went short here, but we had been trending up quite a bit and threatening to break. I should have seen that better. And actually, I did short here and covered, and then I think I bought here because I thought we might get another bounce. Anyway, this now has the potential to 136.50. There's just no if it can get a little higher, because there's just not any real resistance. I don't know. Yeah, 136 has some resistance in the past right here. Yeah, so it's gonna be cluttered a little bit. It might be a good. I did sell one off, so I did get one off here. Another sell at 135.82. So I've been selling into the strength, just slowly, slowly, slowly. And then now is the time to wait. And then I can, because I did sell. Where did I sell? Let me just get the last highest sell. 135.82, 134. So I could buy back in here again at like 135.44, maybe 135.30, maybe, if it's really looks like it's selling down. That's only right here. Yeah, I'd say maybe even 135.25. Yeah, it's a little better place. Put in that puppy right there. Let's say buy now. So it'll grab that up right there. I don't know, why isn't this thing talking at all? There's nothing to say in a while. My trading bot that I'm really building here, I ran out of AI credits. So, all right, so here we go. Down it goes. So that's why we sell.
We've completed an epic new feature, enhancing user experience. It streamlines key tasks, saving users time and effort. This milestone paves the way for even more innovative updates. Stay tuned.
I'm not sure what it did. It probably just picked up
The
the
overall
crash
market
from
sentiment today appears cautiously optimistic. Bitcoin is holding steady, which often signals stability, while Ethereum is tracking the broader market trends, suggesting some alignment among major assets. Our asset, Solana, priced at $135.564, indicates that traders are currently interested, but without explosive momentum. The volume trend is normal, meaning there isn't an overwhelming surge of buying or selling. This steadiness can indicate that traders are waiting for clearer signals before making big moves. However, the lack of volatility could also mean that market participants are feeling a bit uncertain, potentially holding off until key developments emerge. In summary, while there's a sense of calm and stability, the lack of volume fireworks suggests traders are on the edge, waiting for direction.
Right,
Welcome to my journey of building an automated
what you
trading
guys
bot.
think about that, but
This
I
project
think
is
it's
still
not
in beta,
bad.
and let me tell you, it's a constant work in progress.
I'm gonna
Each
shut
day
him up.
brings. Let's dive into how our entry signal works.
All right, so Here we go. Um, we might just keep melting up. That's what Bitcoin was wanting to do. It's kind of melting up. And my experiences can also be like the times when it'll just, I mean, it's literally kind of the reverse of this. Just not quite the bodies. There's a lot more bigger bodies, but we have some pretty consistent, nice bodies. Only really one red bar and all that. Even though we had some red negative volume or more sellers and buyers in terms of volume, but sometimes you can have more sellers and buyers in terms of volume, like more volume on the selling side than on the buying side. But because of when it happened, the candle can be different. And I think those are kind of interesting sometimes. Um, this is not necessarily bullish, I think, when you have this, especially with the kind of the morning star, and there's really negative volume, but it's, more volume was to the sell side, but because of where um, the timing of the buys and the depths of when people were buying, uh, this doesn't feel very strong. This all looks actually pretty bad. And it might even be manipulated on the 1 minute chart, where literally the sellers are maybe a little bit more manipulative and know that they can paint a bar green at the last second. Literally, the last second of that 1 minute, or the last, they can put in a buy order, and and buy up to that to make that bar green, because they have sufficient depth in their uh, account. They can, it's enough money where they can buy 50 contracts if they need, so if there's an 800 volume negative, and they've just been selling into people and selling into people and selling into people, and they don't want that bar to look red because they want to suck in buyers. So they, right at the last few seconds, they turn into buyers to push that bar green, and then uh, you know buyers see that, and everything looks more positive than it really is. This looks really negative. You can just see it, like the divergence between red volume, red, and then these tails too. So that's another sign, is that these are all like kind of negative, where people buy and the sellers come in, people buy, the sellers come in, people buy. This is going to give way. That tells me I'm better off going here to Seoul and just liquidate some of this position right now, like just because I'm going to make some profit. If I say ask, say sell to, I could be completely wrong. Buyers are savvy too. They're all professionals, and they'll hold their hands back, and they'll sucker the sellers in, especially here when it's getting moved against the sellers. There's going to be sellers really, really scared here that they need to buy back, or they need to move down where they can buy back better. And there's sellers here. There's people selling all through this, and then the smart people covered. A lot of people did, but there's also a lot of people that, especially here, selling. They're not going to close that sell position. They're really strong. They've made a lot of money, and they're doing just what I did, but on the opposite side, where they're buying back some, buying back some, buying back some, buying back some, so that then when they see this weakness here, and they see that the buyers are kind of in divergence in volume, and that there's a lot of resistance kind of mounting up here, it's flattening out, they're going to have the dry powder to start selling. And if they've shown here, like they've shown, just you can see, look at that volume right here, red, 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 red. They have the potential, because they're in a stronger, really, position as of today, to push this back down and test again. And then there's Bitcoin. It looks so negative right now. It looks like the buyers have had to do everything they can here to try to push it even up to this, and they're not going to make it. That's another thing, is when all of the sells are coming in before it even hits the average. That's kind of not always the best sign for a bullish sentiment. And it's just lower highs here are what I think we'll start to see. So if this can't get above this or above here, and it's like it's gonna fall. So did I sell? Yes, I did. I sold off 2 contracts at 135.74. And I don't want to like sell everything. It's all probabilities and predictions. But if I was like really just gonna say like maybe this is the time to bail, I think I might sell just another contract, just one more. Now, if it goes higher, which it really could, it could just, all this is just noise. There wasn't a lot. It's after hours, that has a lot to do with it too. It could just jump up above all this and go, and I'll still have 6 contracts, right? And I'm okay with that. I think there's going to be a really good chance that I'll get to buy back in here. Really good chance. I think it's printing below the price, last price. It was, and then it didn't. Hey, there's taking profits is never bad. I'm going to go back to the Bitcoin real quick and see if we're seeing some indications it's looking more bullish. All of this stuff I'm talking about, and with these the volumes and divergence and things like that, and it's in the after hours, man. It's not the same. It's nothing really has a whole lot of conviction. You can read every chart is in. What I think here we're seeing is that they really are playing off the bands, and that now the chance for price expansion is better, because you'll notice that these are widening out. Kind of given room, the tail is smaller. So it's like I said, if it can get back up to here and push through and make a higher high here, then none of this really matters that much if this green bar can get above here. In fact, I would say if this can get a green bar above here and stay, that's like kind of very bullish. That the sellers probably just got really tired. They probably just literally ran out of gas and couldn't keep going, resisting all this. And then the buyers are gonna have the momentum because they were buying through here, and they're gonna be in the green, and the sellers are not going to have their profits. Their profits are evaporating, and they're going to have to buy if they're still short, or they're just going to start taking losses and more losses. And then that gives us the potential, especially in the after hours, that we could see a big run up, break through this. And in the soul, I'd probably target, up here, 138 maybe, another couple bucks. Very reasonable to get up to here again, because the sellers are going to be running, and it's after hours. A lot of people probably opened up new positions into these things. So yeah, I didn't have to sell off like 2, maybe even 4 right here. And it was looking a lot more weak. Like I said, if this it stays green and engulfs this almost entirely, then there's a platform. Next bars are critical. If it starts selling it all below here and gets below here, then we're down. I think we're down for sure. That would be like a bearish engulfing pattern with a morning star. And now the red here can either reverse and we push higher, which is very bullish. That'd be very, very bullish. Or it's gonna, if it goes to here, that'd still be bullish. If it goes to here, then it's mixed maybe. Partly bullish, but if it goes below this, then it's bearish. This is bullish. If it pulls down to here, that's still bullish, because we had a full 5 minutes where we started here and got up to here, and the sellers couldn't do jack. The sellers are probably screwed here, because this is a pain point for the sellers. This was easy for them. They had it really easy. This was so easy, and maybe it's going to be easy for the buyers, especially if this was not anything related to fundamentals. Like if there's a reason monetarily, maybe other markets, currency markets, like other things in the world that I don't want to take the time to try to discern as to the why. But if that is not why, in other words, this selling pressure down here wasn't at all event driven or news driven, or it was solely just technical trading driven by bots and people buying and selling, then it's really a lot more possible that we would move higher here and just keep going. Maybe to here would be a good stop apart, or maybe here. But of course, it makes a lot of sense. Of course, it makes sense, because if this was for no reason except the technical momentum, then this is doing the same things to the shorts that they did to the longs like 2 hours ago, 2.5 hours ago. I think I have a sell in at 136 that I'll let go through. Yep. So now I have 5. And so at this point, I probably would kill all my sells. Kill everything. Because I'm in a strong position now. I've got locked in profits. I've sold everything, literally every share off, I think, every contract off at a profit. I'm well above my 134.46. I'm approaching a $2 gain in Sol, and I literally bought everything down here, and now I'm up here. Well, no, I didn't. I was buying down all through this, but I just didn't buy very many up here. And I really started buying more and bought the most here. My break even was, I think, only, well, it's impossible to know. That's the problem with the fact that the I've already taken losses on the books for when I sold that first. This one, this one. So because I did sell them significantly below there, but I sold everything but like 1 or 2 contracts above the average entry, which guarantees me lock in. And just like I kind of figured, even though there was it looked like we might break through, it might not have been able to pull it off after all. Might not have been able to, because there's significant selling pressure here. And you can see how important it is to push through here, to punish these sellers and push these sellers back and make them buy back. If they haven't already bought back, they need to buy back. And that could give us upward momentum. But if they've already bought back, which, here, there's a lot of selling right here, because it's red. If this was green, then maybe all this would be more bullish. But there's I should say, if it was green, it would have been a lot more bearish if it was if or bullish when it was here, 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 and here. But now that it's here, and this is so red, and we know a ton of people sold here. A ton of people sold here. They are gonna have to buy here. It's as simple as that, you know. These were people panic selling. Maybe they have no plans to buy back in, but a lot of them probably also were people thinking that they were going to pick up, uh, you know, down to 133 or something, that this thing was really falling apart. But sellers came in. I mean, the buyers came in, but there was still a lot more sellers. And then buyers, buyers, buyers. This is not the cleanest chart formation here, I think, to just come down here. But it's just the timing. Sometimes when the bars close, we're really doing good. We just sold off at one at 136. We have 5. We're holding 5. Yeah, so I'm really happy. I mean, I could just close these out and be happy now. So we made like $103 so far in that 3 hours. So that's not bad. That's not bad at all. That wasn't totally that trade. I had a couple other trades just before this one. But yeah, that as many as I've sold off is moving into this, and still having that much profit in. That sounds about right, because I think I had 14 total. And that includes that. So see, this is an example of what you'd almost call like the kind of trade where we sold at 136. So we literally got out at the very high there. And we sold one there too, and 2 there. So we sold 4 off in that top 25 cents and another one at 82 cents. So there's 4, that's 5 shares that we got out kind of like right at the top, I think. And then maybe we buy at 135.50. And so that makes a lot of sense in terms of if this falls apart, we're going to get 135.50 is here. Now, I could move it up. Like I could literally buy here at 135.80. No, you know what? That's a bid. I'm going to do the 135.67 just because of I expect we will see some bounce. Like this is going to be long bodies, and it'll give me a chance to buy another one, sell it a little higher, just kick ass, I guess you'd say. So where are we going at? Was it 66? 67? Yeah, 67. So yeah, we're easily covering that spread. We're buying in lower, we're selling higher, buying in lower, selling higher. We're gonna pick a share up here. It's too tight. I shouldn't buy it here. I really shouldn't. I'm gonna pull it. It's just too tight. The one at 135.50 is a better entry, considering the channel. I'm making it have to come to me here, closer to this, which I think it might hit, and then I can buy a couple here, and then maybe even consider that we might come all the way back down to here. We might see huge selling, like absolutely massive. I could maybe see happening just because of what we saw here and here and here. That the sellers are going to come in here, and buyers are not going to want to. They're just going to be patient, wait, at least till here. But I think the 50 is okay. So I'm kind of just expecting this now to break down to the moving average here, because it really does like to bounce off on this 5-minute chart off that moving average. And if it doesn't, I'll have 5 contracts going higher, you know. But I sold off 5. All was like literally at the top of this run. I was patient, and I'm not always patient. And so this was a good trade, man. Solid, really solid. And I don't want to get too greedy where I would buy back in after selling off here. This is a better place to buy. The 50's okay. And then maybe one at 40 that, you know, it's buying 2 back in, anticipating we might run back up to here again, or we might break down again. So I'd add maybe 1 or 2 here, 2 here, hoping to maybe sell 1 off here and 1 here. And I'm still way above my average entry as long as I'm above about here. Actually, this is above my average entry. My average entry is, but I've been selling off, so it's comparing it against to my lowest sells. Yeah, it's really bad to really look at the average entry that much. It just doesn't work that well. I guess that's part of my unrealized profits, but I've always been taking profits except for just 1 or 2 times I did an inside trade. And I think I always covered those. And then some, even back when it was very, very low. So this is my profit, really, what's left of my open profit, because I've been closing off profits, closing off profits, closing off profits, closing off profits. So that's a really good place to be, man. And especially if it just goes higher. So would I rather it come back down, grab up all my buys, and then go higher? Sure. Yeah, that would be really cool. But, you know, that doesn't always happen, and that's okay. 5 going, you know, much higher, much higher. I'll have a chance to sell off a couple more, maybe at like 136.50. I might sell 1 off, and then maybe 1 or 2 at 137. And that'll only leave me like 2 left, 1 left, which is okay because I can always re-enter positions. And you know, after doing this a long time, I've learned like you want to lock in those profits. You take a lot of risk when you draw down 8, 10, 12, 15 contracts, because it can literally just keep going down. As we saw in the past on that day chart, there was a time where this thing dropped $32 in 1 day, and it'll usually drop faster and it goes up, but not always. But I don't usually just sit with like stops on all the time. One of the things I'm not real happy with is that you kind of got to do a stop market order, but the stop limit orders really kind of suck with currency trading. I've used stop limit orders like 5 times, and like 3 of the 5 times it's blown through my stop limit order, meaning that it hits the stop and then you have to put the limit in at the price or higher, like if you're selling. And if it's a stop for buying, it has to be at that price or lower. And the problem is it hits the stop, but it just keeps going too fast, and your limit order sits on the book and it never gets back up to it, and it never gets back down to it, and the position just keeps moving away from you, moving away from you, moving away from you, and then that limit order never fires. So you can't really use the limit orders. And then on top of it, you pay more if you use pure market orders and just say sell this at the market, and that can screw you really bad too, where you just are in free fall. And you put in a market order. I've had that happen in stocks before, where I've put in a market order and it'll literally just give you the worst fill and the worst possible price on a big downturn like this. You'll literally be the guy that sells right here. If you put in a market order to sell when it's just anywhere in here, you got the worst price possible. And so I don't like to use market orders at all, and you pay more for market orders on the commission. So that gives me another real reason not to. In my trading application here, I'm going to be working on like an auto limit follower, so that as the ask price is moving, say, up, and I put in a limit order and it blocks it, oh, you can't get that. It'll just keep moving that limit to always meet the ask. So whatever the ask is, if I want to get out, it'll always just keep at the ask, put limit orders at the ask, rather than chasing it with market orders, that kind of thing, where it'll just fill. You can put a lot more control with limit orders. Now, it looks like, despite very unconvincing things, and this shows me where I probably could have bought in at that 135.80 instead of 135.50. I actually pulled it up, remember, and thought it was just a little bit too tight. Maybe that would have been better, because I would have had another contract going into this right now. As it breaks higher, it looks like it's going to break higher. All right, guys, you can see that I was able to predict that this was very negative. I sold off like 5 contracts, like right up in here, and I just bought one back in here. So now only got six, and it looks like we might get that bounce here off this. I really use the Bollinger Bands a lot with this Soul Prep, and you'll see that that bounce is not convincing. Really, if we are going to move back up to here, it might take a long time, and there's a lot of sellers still, and so we might just erode. Let's see where Bitcoin is. It's also not showing very much bullishness. I think it's going to have to convince people it's going to recover and go higher. It's got to convince me I'm not going to buy anymore. That's for damn sure. Until it's either down here or we see a new development. This was pathetically obvious that the buyers just weren't there for it, and then the sellers came in, not even that much volume, but the buyers aren't there to save it. So it's real possible that there's a lot of buyers that are just going to be patient enough till it's down into this range again, and they'll step in. And we are at this moving average here, where until it breaks below it to maybe here, buyers could step in. We go to here, but this is literally the moment of indecision. Either it's going to break lower or it's going to break higher. This is like the no man's zone that nobody wants any part of this, and it's part of just trading. And why charts break is that literally nobody is stupid to really want to put a strong buying conviction in, and then nobody also wants to really sell big here. They'd rather wait till it's here to sell. People would rather wait till it's here to buy. Like, everybody is looking kind of the same information here, and they're waiting literally for some idiot, I hate to say it, to pick enough and buy enough to push it up to here, or someone who will sell enough to push it down into here, start selling into it. And as soon as it starts really moving this way, now sellers can more the intelligent sellers will start really pouring in here. The intelligent sellers with big accounts that scalp, that can really afford to not like be as patient as maybe other people. And then if it moves higher, it's kind of the same thing. As soon as it starts to move up and really show some conviction in here, then there's buyers that are going to want to step in. But this is why it's stuck here. Happens not like infrequently. I'd say, if you watch very much, it happened here. This kind of indecision zone. In this case, it melted higher. This is now extremely bearish. If this is not pulled back up to the green, and this is just red, and it finishes here, this becomes not really reliable. It's this is stronger than this. The most recent bar is always your strongest bar, I guess you'd say. It's the most important bar. Everything else before it has a little bit less significance, but one thing that does have a lot of significance is a lot of red. Now I can see it move even just a little bit is important. I mean, we're literally talking like every tick counts where this closes. If it closes up here, that's a lot better. Even if it closes up here, that's a lot better. If it closes at the low here, this is not salvageable probably, and it'll probably come down to here, which I'm happy with in a sense, because my position trading and scalping off of position trading means that I'd rather be long above my unrealized profit and fade into buying into this to build another position with the expectation that this has just been too strong for the bulls, and that we're on the hour charts and the day charts really looking at a a, a, a potential strong move to the upside, to where if I can have 8 or 10 contracts when it has one of those 30 point days in my direction, then I'm in really good shape. Um, but I have to change my risk management and start using stops and figuring out, what is the strategy when luck isn't on your side, and maybe you're 20 contracts in, and it literally just in a matter of seconds plunges $15. Because that's what this thing can do. In a matter of minutes, it can go like $5 or $6 really fast. And that can probably happen at night, and it can probably happen at day. So it's very gross. So it's a dangerous stock. Now, more dangerous is XRP. This thing is very, very, very dangerous, because you can see here it was at like 220. It shaved off 10 cents, but at 10 cents is 7%, man. 7% in 24 hours, where Sol was less than half of that. And I still really had to work to stay in this trade and not, and to turn it into a profitable trade. It moved really fast. I was scalping along and not really wanting a long position. And I was 3 long by here, maybe 4, 6 long by here, 10 long by here, 14 long by here. But you can see what I really tried to do was buy more at where sellers were getting exhausted, and at least it was likely they would get exhausted, rather than 2 here, 4 here, 6 here, and then as things fall apart, 1, 1, 1, 1. And I've been in that spot where, man, and I can buy one and then I can sell it a little higher, buy one and sell it a little higher, buy one and sell it a little bit higher, and kind of just scalp and create the feeling of getting your money back. But like I said, you can fool yourself and do a ton of trades off the bottom like that, and then you'll think, wow, I must have made money because I'm above my average unrealized profit loss, and then you lost like $600 because you just literally didn't you bought so much up here, and you only buy a little here, and then you're down here buying, selling, scalping, and you never have any gains of any kind of distance, where you had big losses of distance. So it's important, because traders fool themselves all the time thinking they're making money scalping or buying off the bottom, and vendors buy, sell. But the problem is they just had way too much buy buying at these levels, and it was real. It's real. It's real easy to avoid screwing yourself. Never sell anything significant. Like, literally be very careful of selling below your average entry ever. Always try to set your sell right above your average break entry, or as close to it as you can. I know I had 1 or 2 that I had to sell, or I didn't have to, but I thought to protect my position it'd be good to sell, and they were pretty close to my break even point. And that's going to help you a lot if you just always try to sell above your break even, and then that obviously makes sense, and then buy below it, rather than doing a lot of buying and selling below your break even, because that'll skew what you think the profits are as the day moves on and you're doing more trading, your average entry is getting skewed. And it's skewed because you book the losses, and once you book those losses, you don't see them in your open realized profit. And so one thing you can do is just always watch your profit for the day. Keep an eye on that because it'll book that loss for your first close. When the first time you sell after getting drawn down 15, you'll see like, oh my gosh, it'll book like a $200 loss because it's that first buy against that last sell, or that first sell against the first buy, last sell, first buy. But coming to my portfolio, I can look and see that I'm at 91.65. Now, one of the things is, I think this is like a rolling 24 hours kind of thing. There's no like set days. So I'm probably rolling into maybe some of my other trades because I don't think I took any losses because it was like at 100 something just a little while ago. So that's kind of interesting. Interesting. Oh, I know why. The position's just lower. I looked at it when it was up here, of course. So this is adjusting. My portfolio is adjusting. I'm like, wow, I was at 106, just a little bit ago. And it's like, well, yeah, it was higher a little bit ago. So I'm basically about $16 off the high. But I did sell off 5 at the high. But that's included in this. That is the daily realized profits. Those are baked in here. But then I compare that to here, a $20 unrealized profit. So that was 40 just a little bit ago. So we've moved down substantially. This was a huge drop. It was almost how much was that? 70 cents. 70-cent drop on a that's significant to just happen all at once, given the trading ranges we're having here. And then this will be probably the place. Do I have any orders at all? No. So here's where I would actually buy 2 at 135. So a lot of times I'll buy 2 at the round numbers. I explained it before, but if nobody's listening, then nobody's listening. Probably not. But now. But the reason is I will plan to sell one of those off at a near break even. And so I'm kind of scaling back in to a long position, especially since this is providing a lot of support. I really think we'll see support here and probably go and test this higher piece. I'm more bullish that this is a pullback and a chance to get in. Then it's gonna come all the way back down here and test all this, and I'll be drawn down at all. So if it gets, and I'll probably do a 135.25 as well, since I got plenty of capital. And we're approaching where I think we're gonna get some buyers, and then we're narrowing the trading range. So I'd be looking to get out maybe like around 135.90, maybe like around here, because this is going to be a lot of resistance, I think. And by getting out, I think what I do is look at selling off all that I managed to scrape up here. So it looks like I'm going to get one more. So I've really only bought 2. I sold off like 5 here. I probably sold off another here. And, I literally sold off. At one point I had 14. Look at those. Look at that, man. Look at those sellers, man. Just as predictable. And I mean, I could not have predicted that better. And like I said, I probably could have sold everything off there. I said, well, why not just sell everything off? And I explained why I didn't want to do that. But that would have certainly been a strategy to consider, just given the the obvious selling pressure. Now, are buyers stepping up? One of the things I'll do real quick is look over here to sell and ask. If the ask is above the last price, it's 1 penny. That's not enough to be significant. But if this was 50, that's very significant. There's too much negative. The bears, the sellers have made up like an hour, or maybe not quite an hour, like 40 minutes of it going up, 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 up. They took that away in, 15 minutes so actually 5, 10, 15. So this is about an hour, and then this is about less than 20 minutes or so. 1, 2, 3, 4. Yeah, this is 20 minutes. It wiped out all of their hour of clawing back up. And but like it's kind of predictable, this even here, we're at 29 now. Every tick counts. I think one of the things I learned trading over the years is every tick counts. Every step of where that price is at can make the difference. And so you watch that stuff and you know that this is a little bit more bullish than if this was down here red. The sellers or the buyers are kind of going against what is obviously a terrible place to buy. Well, then there you go. The sellers are in control, and I had firmly expect it to get to the 135, or at least to here, and maybe here. The Bollinger Band is an imaginary line some of the times. So if buyers are strong, they're ready, they've got dry powder, it's the time of day too. There just literally might have been nobody that cares enough. I would imagine bots are running on this 90% of the time. And there's going to be bots as it approaches this. I'd probably want to, if I want to get really serious as to whether or not this is a good time, I bring up the RSI and look, and it's not quite there yet. So probably you can see it was way oversold here, and we got the bounce, and it was way oversold here, and we got the bounce. What was this level? 2260. Yeah, we might want to think that would be the kind of sell-off it needs. I'll pick up 2 more at the 35 Cero, and it's another reason I do the 2 at the even numbers is because there's, a little bit more possibility it'll get a little bounce off that. And right now it's probably not really giving me a statistical advantage because my scalp to break even is about 20 cents. But when I get if I got a ways to go with derivatives, I think this is about as good as I'll ever do in the next couple of months with derivatives as far as fee schedules. If my spread was down to like 10 cents, that would then probably be a very strong strategy. Just like here, I don't know if it actually got to so it filled me, and then it bounced to 135.11. That would have been perfect for if you had a small enough scalp and you could hit break even at 11 cents, and you really do have a 9-cent break even, which is possible, when you trade enough, and then you can sell it at 11 cents off that bounce. That gives you that break even trade to then lighten your contract load. In other words, you're not holding 12 anymore. You're only holding 11. It's not that you're trying to make money on that trade. You're trying to break even, free up a contract, so then you can come back and maybe buy another one a little bit lower. And then you can sell it off again 20 at your break even point higher, and then you can go down and what you're always trying to do is buy two, you sell one, and if you and as you move in your direction, that one you did not sell, that's your profit. The other ones are really to give you if you only buy one and you sell it off at break even, you haven't made any money. It's like literally that simple of a concept. But as you layer in, you just keep that philosophy. And I do it on the round numbers. And in this case, it's a perfect example. Is I was able to get that fill, and now um, I have 9 contracts total, and my average entry is still below this. So obviously, if I sell all of this off now, I'm taking a loss on those others that I just bought. And I probably kind of I'm going to lose money if I sold this all off, because I'm going to have to put like $1 in each contract for the commission. So really what I'm hoping to do is cover my break evens here and try to hold one. So I would probably try to sell at, if I was really like pessimistic about an upside and I really like this was falling apart and I was wanting to get out, I would sell one at 135.25, and then the other one I would probably sell at 135.50. Otherwise, if it breaks back down, then I buy another one. If I'm very, very more bullish, then maybe I'd buy again at 135. If I'm more bearish, I'd buy at the like 135.77, like that. Or what in this case, it'd be 134.77. Buying a little lower, because it's already proven that you can't trust 135. Like I'm not going to buy if I can sell this one off, and so I'll just actually do what I would do. I would put this in at 135, maybe 25, just right there. That is a profitable trade for the contracts I bought at 135 and sell there. It's a little over break even. It makes like 60 cents. It's not much, but 60 cents 100 times a day, that adds up. And then we're breaking lower like I said we would. I even said this doesn't matter that much. This is imaginary, which really is the test. Is these support lines here? This is where buyers will need to step in. I'm at 9 contracts. That's a little more than I like right now. It's weaker than I expected. I'm very glad I sold 5 off here, but I bought 4 back over this time, and that's not so bad. That's actually, especially since 2 of them were right here at where we're standing, and we still have a profitable position. So this is much different than this being down $30 and 9 contracts when we're up $7.50 and we're up and we got 9 contracts. That's a lot better place. Like it is a lot easier to trade. And look at this. This is now. Like I said, this was not where it needed to be. I do use the RSI if I'm trading more deliberately, maybe, and explaining it like I am now. My decades of experience of losing money. Nah, I'm joking. I've almost always made money. Literally almost the last 15 years I've traded, I've made money. The problem is making enough money where you can pay. And I'll be transparent. If I make less than about $6,000 a month, my lifestyle and how I like to live and my debt load and all my obligations and everything start to get more difficult. So I need about 6 to 7,000 a month, maybe. I could be okay with 5 if I really needed to, but that means I need to make 5,000 a month trading. just to, cover my expenses, and that's not going to grow my bank account. And um, it takes time. Until recently, I'm working on this automated trading bot, but it takes time to trade. It's a time for money job where if you're not in front of your computer and I'm not actually working it, it's a lot harder to make money. If I'm at it every day, the first week or two, I may or may not make a lot of money. And my money starts making money, and I start making money um, later. So now I pull this up. I'm going to pull that puppy. I have no fear right now, and this position is going to deteriorate significantly. And I'd rather just think, okay, um, this is a better price. At least at 10 cents would be a better price. And I know I could like instantly regret this. Let me make this smaller. Um, but um, given, I don't know. Maybe my first instinct is correct. Lighten 9 contracts is too many for this range. It's just too many. So what I want to do is we're going to redo that. Man, this is tough to trade with this RSI on there. I'm just going to take it off. Let's see. Now, if I'm not fast enough and it just if I'm not fast enough and it just busts up higher, then I'll be happy, right? But yeah, it just isn't strong and powerful enough for me. I'll put that 25 in there again because I'd rather sell it. What is going on? I'd rather get and part of it's like kind of showing you the strategy is that bought 2 at 135, and I am hoping to sell, and could I have gotten it? I couldn't have gotten out of that. The highest it went was 18, so me pulling that up and putting it back didn't. So I couldn't have gotten out of it yet, and I'm not gonna be like chasing this thing. This is where I need to get. It's not much. That is like a 60-cent trade because the break even will be at like 20 cents.